What is going on, everybody? This is S Trades, and today's day 13 of the bootcamp. And in this video, going to be going over inversion fair value gaps, also known as IFVGs, right? I kind of touched upon this in my fair value gap video. If you guys want to watch that, link is going to be in the description. But I want to specifically dedicate a whole video to inversions because this is probably by far one of the best and my favorite entry models, right? So the way I want to structure these upcoming videos is pretty much kind of going over some of the entries. For example, like I'll be going over inversion in this video, right? Then I'll be going over like break of structure and change the state of delivery, right? SMTs and things like that, and then I'll get into drawn liquidity and bias, because I feel like drawn liquidity and bias is kind of like a piece where you kind of put all of these things together, right? Because for example, inversions, right, break of structure, CISDs, all of that does go into daily bias and drawn liquidity. So I felt like I don't want to rush that video yet. Instead, I want to get over with these things first, and then we could get onto the, one of the most important videos for probably every trader that there is, right? So without further ado, let's get straight into the video. So what is inversion fair value gaps, right? If you guys haven't watched my video, it's pretty much when a fair value gap gets disrespected, right? So usually, right, on a regular basis, what you would see is there's like a fair value gap over here on the trading leg, right? Price comes down, right, taps that fair value gap, and then ends up respecting it, meaning it holds that fair value gap and it pushes towards that direction, right? So, and this left side bullish example, right, this is a bullish fair value gap that's over here, and it ends up getting respected, right? So because price ends up coming down lower, tapping that fair value gap, and then it ends up pushing up higher. So now that means the fair value gap got respected, right? Now what an inversion is pretty much when the opposite inversion, opposite fair value gap gets disrespected, right? So in a bullish example, it's whenever bearish fair value gaps get inversed, right? So in this example, right, so we make a higher low, right? And then in this leg that made this higher low, right, we made a bearish, let's say a 5-minute fair value gap, right? So what an inversion is pretty much when the candle body ends up closing above that fair value gap, right? So the moment the fair value gap gets closed on that time frame, right? So like, for example, if this is a 5-minute, right, if the 5-minute candle ends up closing above this bearish fair value gap, now that means the fair value gap got inverted, right? The bearish fair value gap got disrespected, so that means price is most likely going to push up higher, right? Same thing in this case, right? We make another higher low, we make another little bearish, let's say 3-minute, right? And then boom, price ends up coming up higher, closing above that inverse fair value gap, closing above that bearish fair value gap, making it into inversion fair value gap, right? So it's kind of like respecting and disrespecting fair value gaps, which is a very important concept, right? Whenever you see bodies and wicks go into a fair value gap, right, and then you see it getting respected, that means it gets held, right? You see wicks, no body closure below that fair value gap, then it's respected. And the moment the bodies end up closing below or above a fair value gap, that means it got disrespected, right? So, and in this bearish case scenario, right, same thing, right? We're making lower low, lower high, and then while making that lower high, we made a bullish example, right? We made a bullish fair value gap, and then we kind of came down, closed below that bullish fair value gap, making an inverse fair value gap, and you guys gotta get the gist, okay? So a very important concept for you guys to understand, because this is by far my favorite, and this is kind of what I use every single day. Like, this is my entry model. Literally, I'm giving it to you guys for free. This is what I use, inverse fair value gaps, because it is so clear, right? You don't have to guess around. Like, for example, with a regular fair value gap entry, right, you don't have to really guess like where is the fair value gap going to get respected. It could kind of push beyond the fair value gap, right? Or it could wick at the very top of the fair value gap, just tap it and go up higher, right? So it's sometimes with the fair value gap, it's kind of hard to predict where the fair value gap is gonna kind of get held, right? Sometimes it covers it fully, sometimes it just taps it and goes, right? When inversions, it's simple and clear. Like, you see it and you understand that something got inverse, right? So whenever a body closes above a certain fair value gap or below a certain fair value gap, boom, it got inversed. So it's really easy to understand. So that's exactly why I love it, because of its simplicity, and it's so super easy to understand, right? So this is pretty much kind of showing the order flow of where the trade wants to head, right? So if we're continuously respecting bullish fair value gaps, right? So for example, there's a bullish fair value gap over here, boom, got respected, right? Price tapped into it, but then it disrespected the bearish fair value gap now, and they'll continue on doing that, right? So that pretty much means that, okay, we are in a bullish trend because we're disrespecting bearish fair value gaps and we're respecting bullish, right? So, and then that in a way of inversion fair value gaps, you could also detect reversals, right? So for example, right, at some point our bullish trend will come to an end and it'll turn bearish, right? So the moment, let's say this last leg is made, right? So this is the last higher high, right? The moment this leg is made, whatever highest time frame inversion in this leg, so let's say 5 minute, right? This is the only fair value gap in this leg, and it's a 5 minute, right? So the moment, let's say it closes down below that bullish fair value gap, now that could indicate the change in the state of, not delivery because that's a whole different entry, but changing the state of pretty much where the trade wants to go, right? So we are now potentially switching trends, and now we might push up lower, right? Oh my god, sorry for my crazy drawing, but that's pretty much what an inversion does, right? So same thing in this example, right? We're in a bearish trend, right? We're respecting bearish fair value gaps, and we're disrespecting bullish fair value gaps, right? But then at some point, one of the bearish fair value gaps is also going to get disrespected, right? So for example, let's say this is a 15-minute fair value gap on this leg, right? And then boom, the fair value gap gets closed above, right? So now the moment this fair value gap gets closed above, that means we are changing the state. We're changing the direction where trade wants to go, right? Now we're most likely going to push up higher, right? So in this case, we might see something like this, right? And then price ends up reversing, right? So inverse fair value gaps could be used both as continuations, like I showed in previous examples over here, and it could also be detected as a reversal, like a full-on reversal, right? So this is why inversions are super powerful, and it's super easy to detect. And again, like I said, this is pretty much what I use every single day in and day out. Every trade that I take is with an inversion, right? I don't enter on break of structure. I don't enter just on a regular fair value gap tap, right? Inversions are my entries, and in my opinion, they're one of the best entries ever, okay? So let's actually now get into some chart examples. So looking at this chart, right, we're in a bearish order flow, right? We're making lower lows, lower highs, right? So we're expected to have some bearish plays working, right? So we have this 15-minute fair value gap, big fair value gap, right, in this leg. So now let's see how price reacts to this leg, right? So we kind of come up, right? We start holding it, right? And then the way we could confirm that this fair value gap got held, right, is by looking even lower and seeing what's happening inside of this leg, right? So boom, the fair value gap kind of ended up getting held. And then if you see over here, right, we have another bullish 15-minute fair value gap, right? So what happens here, right? The moment this candle body ends up closing below this fair value gap, right? So this 15-minute, right, it's bullish, right? So if, let's say, if you're in a bullish trend, this was supposed to get, this was going to hold, right? Because we're in bullish, there's no reason for us to inverse this bullish fair value gap if we're in a bullish trend, right? So in this case, this ended up getting inversed, right? And then what do we see? We see now follow up down lower, right? And then boom, price ends up going lower, way past these lows, right? We have another fair value gap in this leg, right? So after we made this move, right, we tapped into some higher PD array, right? Highest time for PD array. Now we might be potentially looking for longs, right? For price to push up higher, right? So we could ignore this 15-minute for now, right? Now, what is the new fair value gap in this leg, right? We don't have fair value gap here, right? The only fair value gap in this leg is this 15-minute right here, right? So again, if you're truly bearish, right, there's no reason for the candles to close above this fair value gap, right? What we're supposed to be doing, we're supposed to be seeing follow through, right? Follow through lower if we're bearish, right? So this is supposed to get held, right? Because the thing is with fair value gaps, right, the candle could come up all the way up over here, right? But then it has to leave a wick, right? The bodies cannot close above it, because the moment the bodies ends up closing above the fair value gap, right, it's no longer usable. Like it got disrespected, so that means the bearish fair value gap is no longer in play. So in this case, right, if we're bearish, we're supposed to respect it, and then we might be reversing right after this little bearish trend that we had over here, right? So let's see what happens, right? So boom, this 15-minute ends up getting closed, right? And then we have price kind of come back, retest that level, because that's where you're going to see a lot of the times where inverse fair value gaps get created. They're gonna a lot of the times get retested, right? So price is gonna most likely come back down, right, to that area, retested. Not all the time though. Sometimes it could just inverse and then push up higher or push up lower, whichever direction that it got inverse. So, but in this case, right, we inversed this bearish fair value gap, and then we came down, respected it, and now let's see what happens. Price comes back again, retests, and then boom, we see follow through, right? A quick look at another example, right? What do we have here? We're pretty much kind of bearish, right? We're kind of making lower lows, lower highs, right? So we're expecting price to keep on following through, right, and making that bearish sentiment, right? So in this case, what do we have here? The highest time frame fair value gap in this leg is this 5-minute fair value gap, right? So we draw it out, we see how this works, right? So if we're truly bearish, we're gonna close below this fair value gap and go lower, right? And if we're bullish, in this case, if this is a reversal, right, this is gonna get held and push up higher, right? So let's see what happens. So boom, the fair value gap end up closing, and then we push up lower, right? So what happens after that, right? after we tap into some higher time frame fair value gap, right, we create 2 5-minute fair value gaps in this leg now, right? So we have this 5-minute and we have this 5-minute, right? So whenever you see this kind of thing happen, right, do not neglect one or the other fair value gap, right? So if you see 2 back-to-back 5 minutes, right, in order for you to be truly in a bullish trend, right, you have to have candles end up closing above both of these fair value gaps, right? So if, for example, this candle ends up closing over here, right, it can still respect this one because this is the more discounted fair value gap, right? In this leg, we could see something like this, right? Let's say price comes up to the equilibrium level, to this higher time frame fair value gap, right? And then price continues its bearish trend, right? So you have to watch out and pay attention. If there's multiple fair value gaps on the same time frame in that leg, then you have to wait until the highest fair value gap gets inverse for it to truly be an inversion fair value gap, right? So let's see what happens here, right? So no inversion yet, right? No inversion yet because this hasn't got closed yet, right? So boom, we have the first fair value gap got closed, right? We could erase that now, but we're still not confirmed that we're in a bullish trend because we have this fair value gap, right? So let's see what happens then. So boom, now we inverse that fair value gap, both of these, right? And then let's see what happens after, making higher highs, right? So the moment we inverse both of these 5-minute fair value gaps, then price ends up pushing higher, right? Okay, so taking a quick look at another example, right? What do we have here to the left? We have some selling pressure, right? We have a lot of sellers kind of pushing the price lower, right? And we might be expecting the bearish continuation, right? So let's see what we have here, right? What is the highest time frame fair value gap in this leg alone, right? So in this case, I see a little tiny 5-minute, right? Even these counts, like even if they're small, it's still a fair value gap and it's still value, it still will be valid if it gets inverse, right, for a bearish trend. So let's see what happens, right? Price, boom. Okay, so the moment this fair value gap gets inverted, right, you could simply enter a short, right? I'm just giving you a hypothetical situation, right? So boom, you enter a short after this 5-minute gets inverse, right? And if you take a quick look at another example, right, we have another 5-minute below over here, right? So you don't really have to kind of worry too much about this fair value gap because it's pretty far apart, right? Like it's 20 points away. So you would not necessarily need to wait until this fair value gap gets inverse, right? You could, let's say enter over here and then break even once this next 5-minute gets hit because potentially that 5-minute could get held and push the price higher because we are making higher highs and higher lows on to the left of us, right? So let's see what happens, right? So boom, that fair value gap also gets closed, right? And then you see how as this fair value gap gets closed, we create a new 5-minute fair value gap on this leg, right? This is the new 5-minute. It comes back, retests that 5-minute, and it retests this inversion, right? So now let's see if price dumps, and it indeed does, right? So it will go lower, right? Price ends up going all the way to the low, right? So this is pretty much how these inversions work. So literally as simple as it looks like, right? You just have to see and wait until this candle gets closed below or above a certain fair value gap, right? And I really want to emphasize this. You have to wait until it closes, right? You can't pre-fire anything. Like I see a lot of people, right? Don't wait until the fair value gap gets closed, right? They just see that the candle pushes up lower, right? And then they're like, oh, well, that's it. The fair value gap is going to get closed. Let me just enter short or enter long whatever early just to maximize on your, risk to reward. But a lot of the times in those cases, the price would not close above or below those fair value gaps, and instead it would get respected, and then, it would go straight to your stop loss. So it is very important and crucial for you guys to wait and be patient until these bodies end up actually closing in that leg, right? So, and also another very important thing is, right, you have to pay attention to multiple fair value gaps in the same leg, right? So taking a look at our own example, right, the highest time frame in this leg alone was the 5-minute, right? So you have to wait until the 5-minute ends up closing, right? You can't go on lower time frames and try to catch something earlier because the highest time frame in this leg is the 5-minute, right? And that is, the higher the time frame on the fair value gaps, the more power and the more power it holds, pretty much, right? So in this case, right, if you look about going a 3-minute, right, we have this little 3-minute fair value gap over here, right? And let's say we go on a 4-minute, right? We also have this 4-minute, right? So you can't, for example, just enter the short once this 3-minute over here gets closed, right? So let me mark it out so you guys understand. So let's say this 3-minute gets closed, right? You can't wait. So let's say this 3-minute gets closed, right? You can't just pre-fire a short, right? Ignoring the 5-minute because the 5-minute is the highest in this leg, right? You have to wait until the 5-minute gets closed because the 3-minute is not more powerful than the 5-minute because obviously 5-minute is higher and 3-minute, is just a 3-minute, right? So do not pick and choose your favorite value gaps, right? The highest time frame fair value gap in the leg is what matters when you're looking at inversions. Right here, we have a bearish 5-minute fair value gap, right? So let's say people were thinking that this is going to be a reversal point for some reason, right? Let's say that that's what they were thinking, right? And this is the 5-minute, and let's say they go on a lower time frame, right? And then they get a closure on a 1-minute, right? So be like, okay, the 1-minute ends up closing above this 5-minute. Let me enter a long, right? Let's say they slap a long on this, and they look at the 5-minute. It hasn't got closed yet, right? And then what happens? Boom, the thing did it for me, right? You thought that the candle would end up closing above it, and it actually didn't, right? So the 1-minute, yes, the 1-minute closed. The 5-minute, on the other hand, never closed, and you left off of this massive wick, right? So in this case, this 5-minute ended up getting held, right? Because now we left off of this very, very big wick, right? And in this case, this bearish fair value gap is respected, right? It's getting respected. This bearish order flow, this bearish trend is getting respected. And in this case, nothing closed above this 5-minute, so it's still valid. And instead, boom, what happened? We pushed up all the way lower, right? So, like I said, patience when you're looking at inversions. Wait until the highest time frame in this leg gets closed. And this works on all time frames, right? It works on a 1-minute, it works on a 5-minute, it works on a 15, 30, hourly, daily, weekly, monthly. It all counts on the same all time frames, right? Time is fractal, right? So whatever happens on a 1-minute, it can also happen on a daily, right? So we're on a high time frame, we're on a 1 hour, right? So it takes a while for these inversions to happen, right? But these are holding a lot more power, and that's what could show you where the drawn liquidity is and where potentially the daily buys could go to, right? So for example, in this case, right, we have this 1 hour bearish fair value gap, right? We were in a bullish trend, right? We have higher highs and higher lows, right? This very, very extensive move that happened, right? So if you are bullish, right, you want to see this fair value gap get closed, right? Because, if you're bullish, you want to see prices go up higher, right? So let's see what happens. So boom, we'll make another wick, right? See how price went all the way up above over here, but still no closure, right? So you can't count this as an inverse, right? You can't enter a long randomly thinking that, okay, it's going to get inverse. You have to wait until the candle ends up closing, right? So let's see if it closes. So boom, the next candle ends up closing, right? This is an hourly time frame, by the way. So now let's see what happens. So the hourly got closed, and then obviously now we pushed past this internal, and now this is how an inversion looks like. See how the body closed and it got respected. So now we're pushing up higher, right? Okay, another example, right? What do we have here? In this leg, we have this 1 hour fair value gap, right? Again, bearish, bullish fair value gap. So if you're expecting a bearish play, you want to see this get closed, right? So if we see price comes all the way down here, again, leaving off this wick, no closure yet, so no entry. Boom, the next candle ends up closing, and then let's see what happens. Price ends up flushing down, right? So you can see that price ends up coming back, right? Retesting that inversion fair value gap, right? And then price ends up coming down, right? So a lot of times you won't see a retest, but sometimes you do. And if that happens, you could go on even a lower time frame, right? So in this leg, for example, right, you came back, you retested that 1 hour inversion, right? Then you also see another inversion that made in this leg, right? So that is even a double confirmation, right? So after this inversion got retapped, right, then we see another inversion that ends up happening, and that's double the confirmation, because now not only we inversed 1 hour, we retested, and then we inversed a new 1 hour. So now we're really, really in a bearish trend, right? So as you guys can see, the next candle ends up absolutely flushing all the way past all of these lows, right? So the more confirmations, the better, right? So some more examples, right? We have this bullish 1 hour, right? We tapped into some higher time frame PDA rate in this leg, right? So if you're truly bullish, right, you want to see this 1 hour and this 1 hour get disrespected, right? You want to see prices kind of come up higher and then take out all the highs, right? So let's see what happens, right? So we have all of these candles, right? So 1, 2, 3, 4, right? 4 candles, 4 hourly candles that end up kind of just playing around in this range, right? And then the moment this 1 hour gets closed, right? And let's see what happens. Price just goes to the moon, right? So this is exactly how it works. You have to stay patient and wait until these fair value gaps get closed, right? Another characteristic of these inversions that I want to share with you guys is how long it actually takes to invert those fair value gaps, right? So for example, if you see something like this, right, this is the 5-minute fair value gap over here, right? If you see something like this, right, where it takes so many candles to try to do anything, right? So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles in this 5-minute fair value gap, right? So you're most likely not going to see an inversion, right? And even if you do see an inversion at that leg, it's most likely not going to work, because with inversions, what you guys have to understand is the faster it happens, the better. Because if, like, say in this area, right, you're bearish, right, there's no reason for price to just kind of stall and like not really inverse that fair value gap. So if you're just seeing a lot of choppiness, a lot of, just accumulation in that fair value gap, it most likely that inverse is not going to be good, right? And then, that's not really picking and choosing. That's just kind of, putting conditions, right? So if you see like 10 candles, 15 candles waiting for that inversion to happen, most likely it's not going to work out, and it's probably just going to give you like a fake out. You see how many candles, try to close it. Yes. So in this case, hypothetically, this fair value gap got respected, right? But even if it was to close below it, I personally wouldn't take it because it took too many candles, right? Too long for it to get inverse. So I personally don't like those, and it's been proven, right? And so yeah, guys, this is the video for the inversions. One of the best entry models in my opinion, something that I use every single day. And if you guys want to learn more, I'm going to be dropping a lot more sauce in my Discord, right? I'm dropping kind of the basics overview on the YouTube, right? But if you guys want to go more in detail, and if you guys want to see more examples and kind of ask me questions personally, that's going to be up in my Discord, right? I'm going to be doing another kind of like a boot camp for my Discord members later down the line, where I'm going to be going super in detail, right? Having everybody ask me questions and things like that. So if you guys want to be a part of that, join the Discord. And that was about it for this video. So I will see you guys in the next one.